All right, what's up? And away we go. If I could please have it quiet down here, I'm like trying to do a live stream show. So thank you and God bless. What's up, everybody? We just got back from Mama and Papa in law's house and we overate ourselves on Thanksgiving. So hey, if you guys celebrate, fantastic. And pardon me if you're watching on the replay. We'll be with it in a second, but I forgot to do the candles for our weekly communion and whatnot. So just bear with for a second here as we get this going. Well, this is our nice, I don't know what the heck this is. Huntington Home Gardenia or something or other. I don't know. What's up? So we're going to talk about my number one buy. The data's in. We've tallied it all up for the month of March, going across 3 portfolios. And yeah, I don't know what you mean no ad. I changed it to 30 minutes, so I think you'll get one ad somewhere in the middle. And if you stay till the super very end, but either way, what's up? So very happy to see you guys. Hopefully you all did have a wonderful Easter if you celebrate. If not, hey, it's time for friends and family. And again, like I said, overeating. I ate quite a bit of food. We have a tradition for Eggs Benedict. I don't know if you guys eat that, if you know what that is. Let us know if you have any kind of culinary traditions for your... I almost did it. You almost got me. I saw you. Who said Thanksgiving? You've put it in my head, SMG1. You tripped me up. So, either way, okay, some of you got ads, whatever. Hit like 5 seconds, hit the skip button. I'm not pushing too much on you. Although, Seeking Alpha is having a 25% off spring sale. Description link below and all that. But hey, and if you don't want to do it, you're probably going to wait like another month or two before they have some other kind of sale or other. So again, really happy to see all y'all in the house and away we go. So the month of March, the market's still going crazy. It's still just on a tear. I think it's going to be on a tear until there's some kind of catalyst to slow the damn thing down. Oh, by the way, my kids got some Easter gifts for, I know this is just a color changing, like a hyper color. I was in the 80s. Well, I grew up in the 80s and we had these shirts called hyper color. You'd touch it and it would change color from your, everybody had to have it. It was a fad, right? That's kind of what this is. But I read that Starbucks has almost $2 billion of float that they get to use for kind of like an insurance company, when insurance companies take in money and then they may pay it out later, they don't know. So in the interim, that money that they're just hanging on to is called insurance. It's called float, insurance float. And that's what Warren Buffett loves about the insurance businesses, because he invests the float and it's like he's literally getting money for free to invest with. But either way, Starbucks, because so many people buy gift cards around the world and some people never use it. They forget about it. They lose them, whatever. So Starbucks gets almost like loans from people to do whatever they want with that money. So anyway, kind of cool. But yeah, shout out Starbucks. So now we got almost 42 of you in the house. So happy to have you with. And I think this is probably an apropos time to go ahead and just plop right into it. Tell us your number one. Well, if you don't know it, what do you think is your biggest buy? What do you wish was your biggest buy? Something like that. So here we go. This is mine. Make that a little bit. That's going to obscure a little. Why don't we go back to, oh no. There we go. This is what I want to do. Okay. One of these will get it, right? So top buy, we'll just start at the top. The tippy top, we'll go really quick. Agree Realty, ticker ADC, and I'll give a really couple quick, interesting slides about that. It's very similar to a Realty Income, but I think it has better growth potential. So anyway, Realty Income is not what I want to turn this on here. Hold on. Sorry. I need to put myself on there to know I'm working. My phone shut off, but I know, old school, right? I got to know that I'm broadcasting to the world, or what, streaming, whatever you want to call it. And I may even say I'm taping things still, because I did. Shout out if you ever recorded anything from a radio onto a cassette tape, and then you had the dual decks and you want it, because I used to do that. That's how it was back in the day. But I know, before streaming and all this crazy stuff that makes the world a better place, I think. But anyway, Agree Realty, 22 shares bought, added $65. They pay a monthly dividend, if you didn't know. Second, 1 share of J&J, 1 share of SCHD, and then 20 shares of Harrow Incorporated. Again, they don't pay a dividend, but I really do like the business. I think they're going places. So sold. I'm still trying to break the habit. We just started the month of breaking free of Altria. What's up, Rob? And Kevin, Portfolio Leo. They're Portfolio Leo. That's what we're looking at here. So sold Altria, 23 shares. We got a lot more to go. And it was literally me trying to think, I think I have an addiction to the dividend from Altria, even though the business is, I'd say it's declining, right? Cigarette sales are 85% of their revenue, and cigarette sales are declining year over year, but they're compensating, offsetting that by raising the prices. It's only going to go so high. I don't know. I mean, I know people like their cigarettes, but is somebody really going to be paying $30 a pack one day? Maybe. I don't know. We'll see. But nice. Shannon, you bought Realty Income. I'm going to show you a very interesting thing here in just a second. And then you can see the March, the net, the Patty is the, not Patty from Ireland, but the projected annual dividend income is actually negative because those Altria shares pay such a high dividend, and it's so damn addicting. And I kept telling myself, like, I'll sell out of it when it gets to 44, and then it's at 45, and I'm like, maybe 46. I'm just like an addict, bargaining and not doing so. Those 23 shares are me starting the cycle of trying to break this addiction, but I'll still have exposure inside of they're inside of SCHD, right? And also various like VVIAX in our retirement account and whatnot. But and then the dividends you can see there: J&J, Prudential, LyondellBasell, Chevron, Realty Income pays monthly. Main Street Capital is 81. That's because they paid a special dividend and their regular monthly dividend. SCHD, $94. And then we got our first monthly dividend from Agree Realty, which is going to be much bigger now because we have more of those shares. So that's that. But I know a lot of you are maybe not that familiar with Agree Realty. They're a triple net lease REIT, which means that the tenants pretty much pay for, the upkeep, the maintenance, taxes, insurance, all that stuff. But let me throw this over here. I'm going to pull myself off so you can see this a little bigger on your screen there. So on the left, we have the top tenants for Agree Realty, and on the right is Realty Income. Now, very interestingly, the orange ones on Realty Income on the right, those are the investment grade tenants. So I think those are, oh my God, what is it? Triple B? I think triple B minus and higher, I think is the investment grade, the investment grade. But anyway, so you see the orange ones. And then on the left, we have Agree Realty. So there is some overlap with like Dollar General, what else? CVS Pharmacy you have. But look at the second one for Realty Income. Currently is Walgreens with 3.8%. Now keep Walgreens in mind because you don't see them in the top 20 over on the left for Agree Realty. So check this out right here. This is from, by the way, both investor presentations are linked in the description below for Agree Realty and Realty Income. Their newest ones if you want to check that out. But look at Agree Realty on the left. Agree Realty had a 30% exposure to Walgreens in 2012. Currently, they are down to 1%, and they pointed out that they started divesting way before the pandemic, so they've gotten ahead of that. Agree Realty has a little bit better balance sheet, little bit better dividend growth. They are smaller, and I think they'll be able to grow quicker. So I thought that was very interesting. But there you go. So those were the That's what we did. So I actually went negative in March dividend, projected annual dividend income, but it'll balance out because we have a lot of cash sitting around and a dividend amount of $405. And we're going to hide you. I'm going to come back to you, take a sip of my tea, and we're going to get to your comments. Yeah, so I love seeing you like Dan and great God, Nick's with your bullish with ADC. I think so. I don't. What am I up to? Let me pull that up on. Oh, who mentioned they were buying paychecks? Before I popped on with you guys, I was not familiar with paychecks and looked them up pretty quickly on this. Let's see if this shares. The paychecks. They are a human resource and employment service, and they do payroll, benefits, and insurance services for small to medium-sized business. So I hadn't heard of them. Yeah, very interesting that very fast dividend growth. I know nothing about this business, but uninterrupted dividends, 32 years. They've been growing that for 12 years. And yeah, it looks like they're getting ready to raise the dividend once again. So pretty interesting. Their yield's about in line with the 5-year average. But just one really quick note here was that what we like to see, what I like to look for, maybe make it a little bigger for you guys, is the free cash flow payout ratio. It's there. It could be a little better, but you gotta love seeing this. The free cash that's stair stepping up into the right, and just the earnings per share. You want to see those going up into the right, but also you need to see sales coming in. And this is something I looked at with a business that I sold out of, was Eaton. So they don't really buy back shares. Very, very gradually they do. But that total sales revenue is just every year. It's just going up. So it's very super high return on equity, return on invested capital. I mean, their margins are really good. So this is a very interesting business, and they have no net debt. I'm going to look up who said this, but very cool. So there you go. Take a pick. Take a look into paychecks. That's an interesting pick right there. And then, yeah, since I mentioned it real quick, and I know you guys' comments are building up, but Eaton was one I stupidly sold it like 160 something because I thought it was pretty overvalued. But it's been on a tear. But the thing that you got to look at is, dividends growing nice for Eaton. They do a lot of industrial. They were in my wheelhouse, a lot of enclosures, electrical components, things like that. So I think they're pretty overvalued, but I'm going to just show you one thing here is their sales. Look at this, pretty much flat over the past 10 years. So they're doing they're very well managed, but this would be a concern to me that it's been on such a tear. And put it this way, and I'll leave them with this. 24, and do this if you're looking at any business. In 2014, their total sales were $22.6 billion. Last 12 months, $23.2 billion. Look, it's just been flat. There's been no revenue growth, and they currently want us to pay 30 times earnings for flat revenue growth. Man, I just can't get on board with that. So if you're still in Eaton, very well-run company, but I mean, eventually something's got to break there. And why was I going into the portfolio? I forgot now. I think I was going to look at how many shares of Agree Realty I have. We'll just do, it's right there, 32 shares, and it's currently 1.1% of the good old portfolio as Agree Realty. So we're building that. We're going to get to 100 eventually. So I'm going to buzz bomb through here. I don't know if Ryan's still here. I know he puts it on in the background sometimes. But yeah, I haven't been loading up on Visa. Not as of yet. Sorry if that slurping was in your... I'm not trying to be like some ASMR channel here. So let's see what you guys are saying and what you're buying, what you're doing, what you are... Come on. A lot of greetings, Shamir. Oh, Shamir, I saw you on the Cash Flow Kings yesterday. So, hey, shout out to the Cash Flow Kings. They had me on their channel. I know you got them. They're in Buffalo, and they're down there in Arizona. The team, they make a really nice team, the Cash Flow Kings. So they had this guy on. talking some investing. Love it. Yeah. Okay, let's see. Good. Friends with the Benedict. Oh, okay, we matched up. Mentioned. I know it's weird, right? It's really weird, right? When he messes up words and they just jam together. Sometimes you have just so many thoughts in your head and they all try to rush out of. It's like people in a crowded theater running for the exits. Like they all can't fit orderly through. Everybody's just trying to jam through at once. Kind of like that way when you have 55 thoughts in your head trying to get out the door, out that mouth all at once. So I asked what you guys. Oh, by the way, Kevin, longtime listener to the show and watcher, and he's working on the Dividend Snowball over. Well, 100 individual companies. You're kind of building an ETF there, Kevin. So, but you know what? That's too much for me. But if it works for you, baby, that's all that matters. There's more than one way to get to financial heaven, and you have to do what works best for you. Will it work out? I don't know. I don't know if whatever. We don't know what's going to happen tomorrow, but that's really cool, man. So you're at the century mark. Not probably as maybe someday you'll catch Darth. I know he has too many, in my opinion. But so shout out to Starbucks. Yeah, we're talking about Starbucks. So interesting. Yes. Shout out again to Dire Straits, wrote that song, Money for Nothing, and their guitar player, no relation, Mark Knopfler, spelled the same way, the beginning, but it's my, yeah. Dude, Craig, where in SoCal are you from? By the way, with the live stream coming up this week, I may have to do it Friday after Ryan's show. We'll see. I might even do it Thursday, because we're leaving for Vegas Saturday and I won't be back till Tuesday evening. So we'll be out there the whole weekend. And I will be meeting yours truly for the first time, Mr. Rennie Williams. John, you bought more Vici and ARC. I don't know ARC. I don't know if you missed the C, because I know ARCC is Aries Capital. Frank, your biggest buy was Abbott Labs for March. Nice. John, you're buying SCHD, VYM, and SPYD, so you're ETFing it. That's funny you say that. Is Vici really getting culty out there? Oh, I hope so. Well, Warren Buffett would always talk about they never really want to share the positions they're building, because in his mind, when he builds that conviction, he would actually like to see the share price decline so they can buy more. So when the share price runs up really quick, and it means they're going to get a worse performance. So you kind of think that when we do what we do, if you find something great that's undervalued, you'd really like to, keep it under wraps so you can just keep adding more and more and more and more. But if word gets out, kind of comes to mind in over on Twitter, Compounding Quality has been talking about Dino Polska. And and oddly enough, there was really cool pushback from the Dividend Talk podcast from my guy, EDGI, European Dividend Growth Investor. He pushed back on it saying I don't like this as an investment, but Compounding Quality, you get a big account, a big influencer that's in Europe saying they really like this, and everybody's going to do that. Rush in. Sorry. I'm reading your guys' comments and trying to finish that thought. There you go. So Shannon bought 78 shares of Realty Income. What is cake? I got to look. That does not ring a bell. I know DNUT is, which by the way, Cheesecake Factory. No, they're unrated. Nice. 3% yield. So that's an interesting one. I could see that becoming a meme stock. Yeah, I just buzzed through real quick. Looks good. Looks okay. I don't know if it'll knock my socks off, but more Vici buying. Dude, I love seeing what you guys are buying. This is just awesome. Jim, there you go. He bought more shares of Energy Transfer, 9 more shares of Main Street Capital. See, for me, I'm price anchored to under $40 a share for Main Street Capital. And that's another bad habit that I'm trying to break, is being price anchored, because yeah, I was buying it, and I think 37 and change is my cost basis for Main Street Capital, but I don't know if we'll ever see that again. Maybe, maybe not. If the business is growing and increasing in value, then guess what? The share price is going to go up too. So it may never get down there. And dude, Shamir, exactly, man. That's what I'm totally saying, is that I had to like check myself and say, I don't necessarily, I'm not very confident with the business, but those damn dividends, the high yield on Ultra is just, it's like a true addict speaking, saying, yeah, I can sell whenever I want. I'll quit Ultra's dividend when I see, whenever I want, I'll quit it. So, it's funny, Lucas, and thank you, man. Thank you for working in the trades. I know it's a struggle right now in my industry that, I go to suppliers and they'll start asking me, hey, did you guys, have too many people? We're really hurting for people. So yeah, I'm sure, Lucas, you might be able to attest to that. Nobody wants to work with their hands anymore. Although I did read that working with your hands could be one of the keys to longevity. So John, what you got going on here with Pepsi and Pepsi Foods chips and carbs also be addictive? Oh, 100%. And dude, this can get like way into, McDonald's is addictive. Starbucks. I'm still not convinced that Starbucks doesn't have some kind of, crystal meth or PCP, some kind of highly addictive substance that they put in there, because my God, people love Starbucks. And I'm not a coffee drinker. I don't buy it. My kids do drink it, but they have gift cards. My teenage daughters, they always want to go to Starbucks, which shout out if you're in Vegas. We're bringing them and their gift cards. Oh, by the way, word to the wise, if you have people with Starbucks gift cards, have them download the app. Yeah, you get reward points, but you can just load your gift cards onto the app and it's just all done, which is one more step to frictionless consuming of Starbucks products, I guess. Because as my sister-in-law was telling us today at over Easter brunch and then dinner, that yeah, you can you just order from your phone, and then you just do it on your phone, and you tell when you're going to be in to pick up, and it's just done. It's so easy. So the other trade that also smokes a lot is truck drivers. There are so many, at least I'm guessing everywhere, because they're over the road drivers. There's so many Polish and Eastern European drivers, and I think it's like law over there or something that they all just smoke, because so many of them smoke cigarettes. Pat, I want to get to you. Been buying Next Era Energy. I can put the tilde over the first either, so nay. Enbridge, SCHD, and you hit ALH. I don't know what ALH is, man. Please share with the class what ALH is. I don't know why BTI is down. If anybody has insight into that, let me know. I did read about Hershey, though, and on Odd Lots, I think it was Lots More. I do like the Odd Lots podcast with Joe Weisenthal and Tracy Alloway. I like it. It's a good show. But they had on one of the Bloomberg analysts, I think, and he was talking about cocoa, kind of his specialty. And he said eventually something's going to break. But it was really interesting going through, hearing the chain, how I think 75% of the world's cocoa comes from West Africa. So like Ivory Coast, Ghana. I can't think of the other two countries, but they're over there near Ivory Coast and Ghana. And it's just like, so they were saying, well, why don't people just build greenhouses here and grow cocoa here, the trees? And he said, well, yeah, you'd have to build the greenhouse. You'd have to heat it. So I guess 20 degrees above and below, or 20 degrees away from the equator, or 40 degrees, something like that. That's like the sweet spot for cocoa, where the climate is just right and it's just natural that it grows. So if you were to try and grow it in Chicago here, you're going to have to heat it, and it's going to cost a lot of money. So it almost doesn't make sense to do that. But anyway, so the point is that eventually it'll stabilize. And that's kind of why I think one of the big reasons Hershey's has been hit is just that the cocoa price has just gone up so fast and they can't price that in. So it's going to be a net negative for them for the near time being. Ednice, what's going on? Thanks for coming back. Thanks for coming on back to the channel. We'll get to your question here. Let me take another sip of the tea. Should you buy an ETF that tracks Russell 2K? For example, IWM. I don't see a reason why not. A lot of people think that some of the small and mid cap stocks are going to perform better over many years, but we don't know. This is one of the reasons why I've been talking with a few family members that we're talking about investing, and I just tell them just S&P 500, or what I prefer is VTI. I just would rather get the whole investable U.S. market. There's a lot of overlap between VTI and S&P, like a VOO, S&P 500. So, yeah, honestly, I've never dug too deep into the Russell 2K, but it has, put it this way, it has the potentiality for much more growth because the businesses aren't just the mega giant caps where, you start to wonder, is like Apple's growth tapped out? Where's it going to go? Where are they going to grow from there? I did see that Apple has 2 years of basically flat revenue, so they aren't growing that much as they used to. It's funny you say that, John, about Nvidia, because if you look at their price to earnings ratio, they're actually undervalued because what they're earning now is just, it's insane. It's out of this world. So I don't know. It does feel overpriced, and it does feel very bubbly, like the the dot-com crash, the dot-com bubble. That's what I was thinking of. But Shamir, you've been ditching a lot of the high yielders. How old are you, Shamir? If you can share your age or you don't mind. Oh, dude, I'm so far behind you guys. I'm gonna buzz out here quick. So I want to get caught up. I don't like being this far behind. And yes, I did see that. I did see that. Yeah. Oh my God, I'm so far behind. I apologize, everybody. I'm getting caught up. So if you said something really prescient, important, if you explained the meaning of life and I'm zipping on by you, no, I do not, sorry, reading, thinking. So Paychex does accounting stuff. Interesting. Is there an ETF that doesn't have a charge or a fee? The only one I believe that does, Trevon, is the Fidelity. Somebody put it in the chat if you haven't already. I think it's FZRX, something like that. It might be. Let's see. All right, I'm getting caught up. I'm almost there. Interesting. Shamir, Coca-Cola dividends tomorrow. Journeyman, you might sell Kenview this week. Interesting. So if you would share with us why you might do with that. So yeah. Oh, by the way, I didn't tell you, and of course we're putting it out there, but we will be going to the Punk Rock Museum. I'll shoot you the time, but it is going to be, so Saturday's the show. Sunday we're going to Punk Rock Museum. I think it's at like 11 or noon. So you're welcome to join us if you want to hang out with us, though. So we will do that. Yeah, and then Monday we're going to Omega Mart. So looking forward to that. Eli, will we go? I saw that. Will we live together? I'm like, probably not. He's getting married. I have a family, so no, we're not going to live together. But no, I don't think so. It's just going to be too crazy. And again, I'm going with my wife and 2 teenage daughters. So I do want to, though. I might have a drink with Ryan and Nick, Dividend Growth Income. Interesting. 3M is spinning off Solventum tomorrow. Cool. I don't have that. Who puts brown sugar on their burgers? Probably sugar addicts do, because I don't see any reason to do that. But then again, this is coming from a guy that grew up with this is from a guy who grew up with a grandma that used to put sugar on strawberries, and I don't know. She did all kinds of stuff like this. And, okay, my God, I'm always go to Vegas Sunday through Thursday. It's cheaper. Yeah, we're going to see Social Distortion and Bad Religion, and that's on Sunday night. So just paying for it. J and B, you sold SCHD. Again, I'm getting caught up here, so for all y'all, I do apologize for pulling a Kevin Burgess and spending so much time. And no shade on Kevin. I enjoy ribbing him about that. What am I buying and trying to add more? I think ADC is really solid. Agree Realty. Again, also non-dividend. I'm buying more Harrow Health. I think they have a really, really, really big runway. And I would not be surprised if in 4 or 5 years that they were over $100 a share. Just my guess. They could be bankrupt by then, but I doubt it. And my conviction is that's where they're going. But yeah, there's a lot, man. I think J&J's at an interesting spot. I think a lot of people, we just talked about Kenvue, which they spun off. I think a lot of investors are just worried about, there I go, I got an ad on my phone now. I think they're just worried about J&J sans, or without, fancy word there, right? Without their consumer health division. So, we'll see. Yeah, some of you guys put it in there what you think. Probably, yeah, it's hard. It's getting harder. There's stuff that's undervalued for sure. I just did a video though, right, where I did the fun stocks. I did in it. I'll spoil it. It was Build-A-Bear Workshop, BBW, Nathan's Hot Dogs, Playtika, which does mobile games, which looks very interesting, and Marine Products Corporation, ticker MPX. Why are you locked, girl Maxu? Why are you locked out of your top pick SPG? Is it just because it's too high? Holy smokes, Marlon, 15K on Vici. Man, I think it's solid. As I said on the Cash Flow Kings, I'm a big fan of Ed Petoniak, their CEO. I do like that. Yep, the donut and McDonald's deal. That's why Krispy Kreme went up, so I thought more people might sell. I think you're asking about DIVO. Oh, was that a reference to I asked who did? No. Oh my God, I'm getting caught up here. Sorry. 7 shares of Nintendo. Nice to see you in the house, Darth. And I do apologize so very much if you guys did share anything brilliant, wonderful. Dan, who's our accountant friend, thinks BTI is intriguing at 29 to 31. Nice. Starbucks grew revenue at 12% last year. McDonald's at 10. Yeah, again, we've talked about, I think a lot of the issue with Starbucks is China, right? If the whole thing with Taiwan goes down and the world sanctions them, they cut themselves off from the world. But that might be cutting off their nose despite their face type of thing. And yeah, Mountain High's been nibbling on BTI under 30. Beautiful. And I say beautiful, I mean for you as I'm selling Altria here. But yeah, Altria just, that it's their product and personal choice. But yeah, so some of you guys, Hershey did take a little bit of a hit, right? So Shamir, you're still eyeing Hershey and hope to nibble away like Starbucks do. That's some of the best ways, right? So let's see what you guys are talking. Watered down beer, it's a great. Oh, with my Easter dinner, I did have a Who Garden. I do like that. We got flying dividends in the house. What's popping, man? I'll give you a crisp salute. I love the channel. Well, we try. Just, being me. It's a little goofy and wacky sometimes, but hey, that's me being me, I guess. So you started dividend investing just 2 years ago. Got the snowball going strong. $1,500 a month. Wow. Oof. But and you had to ruin it. No, you didn't ruin it. Saying you're buying more TSLY. Do pray tell, why are you buying TSLY? I'm very, very sour and bearish on TSLY. I just think that I think they're making money off investors. I think they're giving, if you read through what they're about and they explain it on their website, they even say that the return of capital is part of the deal, and not a return on capital, which is good. A return of capital, of your capital, is not good, which I think is why the net asset value of the fund keeps eroding. It's just, unless I'm missing something, I've been skeptical from day one and staying far away. Yeah, the only thing I know about Canadian donuts, John, is Timbits, and we were there a few times. Oh, nice. Shamir, you're my age almost. I will be 46 next month, so. Or wait, yeah, in April. So it's almost next month. Close to saying this month. That would be funny. I'll be 46 this month. Because technically, right, it is over in Ireland, Yeah, it's about April over there. April Fool's Day. You guys play any April Fool's pranks? Do you do anything like that? I remember my grandparents, God bless them, I grew up with them, and my grandma one morning when I was in maybe second or third grade told me was I'm getting ready for school, and she says my shoe's untied, and I look and it's not, and she said, "Oh, April Fools," and it broke my heart. I thought Grandma lied to me. What's up, Sam Clark? I'm almost caught up to all you you people out there. Frank's Long Ken View. Interesting. I haven't dug into them too much. What's up, Dividend dude? I've seen you on X, Dan. I'll share your name. Yeah, so we were family, dude. I honestly, I get energized. I get pumped when I do this to talk to you guys. But, man, I ate too much food. And on the ride home, I was like, oh, I'm so tired. I just want to go to bed. But, hey, I got my tea. I got all of you in the chat. And honestly, I love it, man. I love it. Maybe someday I'll do a couple live streams a week. I don't know, I just enjoy hearing all of your thoughts, my thoughts on 3M, and you people, you people feel free to share it. For me, I don't, let's look at it real quick, Ivan. As I see, Darth is still a fan of 3M. I know it's in his field. So, and Fast Daddy too. I've been stocking up on too much cash, and it's starting to look not so good. But real quick, let's see if we can give a quick. You like that? Real quick, let's see if we can give a quick look-see at. There was Cheesecake Factory. So I'm trying to remember exactly what, other than the litigation, right? Because that'll be over someday. But what threw me off, and we'll see. They get a 40 dividend safety score of 40 unsafe. We'll see if they cut. I think the cut will be. We'll see what their dividend. I don't think they've reduced it yet to compensate for the spinoff, which they've done a whole bunch of notes on this and whatnot. But yeah, that dividend, they've been growing it microscopically. So they have a 64-year dividend growth streak. But, I mean, look at that. A 2% 5-year CAGR. Not very good. So, yeah, they've a penny a year. They've been doing this for a long time. And that yield is really high. 51% above the 5. I know I'm going really fast. I don't want to get stuck up on this. But, yeah, the free cash flow payout ratio is okay. And again, this might look a little different after we see some of the numbers without the Solventum assets, but sales growth, it's just been spotty. Here, this is what it was. This is one of the things I didn't like. Look at that sales growth: 31.8 billion in 2014, 32.7 billion. It's just flat. Like there's no revenue growth. And return on equity was good until lately, right? They've been having some issues, but but we have to look and invest through the windshield. Like it's okay to look at where things were, and their net debt, shot up to 70%, the highest it's been in a long time, at least 10 years. So it wasn't for me. It was not for me. And I know we got to do some news here too. And okay, so your REITs, it was going higher. But again, it might not pull back. And that's one thing that I'm really trying to break a bad habit on and wrap my head around, is that if you think that Simon Property Group, and it can be dually, right? So if they're doing better as a business, if they're growing their revenue, growing their earnings, and buying back shares, then it's going to be much more difficult for us to see those prices of yesterday or yesteryear. And this is something that I think we can all benefit from, is to say, this is where the price is at right now. The market doesn't give a damn where we want it to be. So we have to look at where a stock is right now and say, is this business increased in value? Do I think it's going to continue increasing in value? And if you do, probably a good space to buy it, because there's just no guarantee that it's ever going to go back to where you want it to go. Yeah, and then John, real quick with the yield max ETFs, I don't know if there's going to be a crash. I don't know when, but I put it this way: many super investors, you just don't see them buying this, and I think there's a reason why. So I would stay away. I hope I'm wrong. I know, Darth, we've talked about it. It would have been fine if Tesla didn't suck. Yeah, I mean, probably, but that's what you get with the synthetic covered calls and but that. So I don't know. I mean, I will say this. It's not for me. I will not invest unless something drastic changes in any of the yield max funds. But for those of you who do, Darth, I honest to God hope I'm wrong, and I hope you make a lot of money from it. And that's, No, I think you mean return on capital. Return of capital is just them returning your money back to you, right? So you want to return on the like a ROCE, like return on the capital. You know what I mean? But what is the alternative? Well, I don't. No, I'm sorry, man. I get what you mean. I get what you mean. You mean like instead of it just incinerating and burning up. So yeah, getting some of your money, I guess, is okay. There you go. So yeah, I know you've, Dan, Dividend Dude, you have a YouTube channel and you've talked about some of that. So yeah, and again, they're giving some of the investors their money back, which is why it's eroding the net asset value. So that's, yeah. And there it is. The last, you said it, man. Well said. Just buy the underlying. I mean, there's ways to replicate it if you want like a leveraged, the performance of a leveraged ETF. So if a stock was, I think, trading at $100, I think you can just buy a $50 strike, and there you go. You get your 2x leverage. So if the stock goes up a few bucks, you're going to make a lot of money really quick. If it drops, and that's kind of the same thing. What happens? You'd be 2x levered then. So, and there's no expense ratio. You're not paying a fund manager to do that. So you can kind of do your own recreation of what some of these leveraged do. Is it a Ponzi scheme? Yeah, I don't know about Ponzi scheme. I don't know if I'd throw that out there. I just don't like it. I think it's just it's a vehicle that's used. And like I said on the Cash Flow Kings, as a younger person, I'd spend times in two places that are specifically designed from the moment you walk into the building until you leave. They are designed to separate as much money from your wallet and your bank account as possible. And those are gentlemen's clubs and casinos, from, a little bit of boots on the ground experience. And money I have absolutely lost that I wish, as my wife reminds me, imagine if you would have invested that money. But hey, when you're a young sailor that's single and you're 18 to 21, away from home, it's not very hard. And I will say that military members get preyed upon when you're in foreign place, or not foreign, well, foreign to me, Norfolk, Virginia, as they say. Yeah, I was there. I was in Norfolk for a while as an 18-year-old, and some places got my money and some people got my money. But hey, I got an experience and I got some sea stories that we're not going to share on this channel anytime soon. All right, I'm almost caught up to you guys, so then we'll look at real quick at some of the news that Simply Safe shared. Oh my God, this time just flies so by. So this time just flies so by so fast. Yeah. So yeah, and again, maybe I'm right. And I hope for you guys. Oh, flying dividends, you're about to retire. So maximum dividends, not interested in growth at all. Well, there you go. So that is a great way to highlight that it's so dependent. There's no one blanket answer for anything, and it's all dependent on your age, your capital available, your risk tolerance, your goals. I mean, maybe you work at a job that you would do for free. If that's the case, That's here. What are you doing, Darth? Using the yield max ETFs to buy dividend growth stocks, Nvidia and co. Yeah, it's a hot thing, man. But honestly, I can hear Peter Lynch. As soon as I read that, one up on Wall Street, Peter Lynch said stay away from hot stocks and hot sectors. So that's interesting, Jay, that you think the China Taiwan stuff is overblown. Yeah, it is. That is a very good point. Maybe Russia's a little different, but I think, and as I say, maybe Russia doesn't do this, but I heard it put that once that a lot of the world is playing, checkers while China is playing chess. The rest of the world mostly thinks in months or years, where China thinks in centuries. So if that's the case, then yeah, I it would be bad for them. They know, like the writing is on. They always say, "Oh, the saber rattling," and if they invade Taiwan, they know they're going. It is going to be swift, and it could be nasty for them. I don't know if they're that silly, but I think just both sides need to just. We need them. They need us. It's just the way it is. Okay. Oh, sweet. I almost did it. Guys, I'm going to work my butt off to get so much better at trying to pull some of your awesome comments out like this. If I were about to retire and I only wanted max divs monthly, where would I park 20 grand? Wow, nothing about growth, just monthly dividends. I would probably feel safest with a realty income. Like a realty income, agree realty, but that's your growth. So we'll whittle it down. Honestly, I would just think realty income. I mean, they're so big, they're so entrenched. Yeah, and that's one of the knocks on them is that they're not growing the dividends real quick anymore. They're probably not going to have real, big share price appreciation. So not investment advice, but just my opinion. If all of a sudden I was, transposed into your situation, I'd probably do realty income. I mean, it's real estate. Sumit Roy, their CEO, is trying to grow the business, but he even says, if you listen to the earnings call, they'll even say it's getting, because of their size, it's getting real hard to move the needle. And it's kind of like the bigger you get, the more of an anchor it is, and the harder it is to grow, as Warren has, talked about ad nauseum. The bigger that Berkshire, I did it. See, it got. So that would be my guess. All right, good. You guys are talking yield max. We got that. So I'm going to pop over to some news real quick from Simply Safe Dividends. Good. Fantastic book. You can even read it. If any of you are in the United States and you have a library card, and if you don't, go to your library and get a library card, and then download the Hoopla app and the Libby app. We've talked about them before. Your library will tell you about it, at least here in the United States. I don't know about internationally, but man, it's free books, audiobooks, ebooks, magazines, especially on Hoopla. They have movies, TV shows. You can get stuff sent to your Kindle. Highly recommend it. I am currently reading, I'm about halfway through a massive book by H.W. Brands, who I believe did The First American, which was a Ben Franklin book. And it's a book on Ronald Reagan. It's just called Reagan. Very interesting. And it's kind of funny because I don't know, I came across it. I was looking up books by the author, and there was a Reagan one. So I remember him though. He was president. I was born in 78. Reagan was elected in 80. So from 80 to 88, from when I was 2 until 10, he was the president. So for most of my childhood, I only remember Ronnie Reagan. Yeah, journeyman, you probably know. I think they describe Norfolk as the armpit of the East Coast. So I don't know. That's just what they say. All right, we're going to do some news real quick. Oh, there you go. Look up BEN. That's a nice yielder from Darth. So yeah, good. Thank you for sharing that too, Jim. The internet, God bless it. All right, we're going to do news here from good old Simply Safe Dividends here. As soon as I pull it up for you people. You people. on the other side of my screen. What am I doing? Oh, he's loopy. All right, what was Monday? Let's see if I can remember the last one we looked at here. There it is. So it's got to be Cracker Barrel, CN. Oh, I remember. I said Canadian Natural sounded like a beer, and it's not. It's oil and gas exploration. So, oh, Unilever. That was the last one. Okay, so here we go. Brandywine. I'll make this big for those of you who are visually challenged in your older years. Brandywine was downgraded to 30 unsafe. I'm going through these real quick because we're short on time. Leggett amended their debt covenant. Yeah, they've been rising. This is one that yours truly has been stupid about. But I guess I would sum this up by saying is that it's like they increased the limit on their credit card. They went from 3.5 times leverage to 4 times leverage, so they can borrow more money now. And they did mention that they would review the dividend. They refreshed their H&R Block safety score. This is a short one. VF Corp, another dividend downgrade. So they have been just problems. And Vans, as I was spinning through this, has been struggling. Oddly enough, Vans has been struggling, which is 25% of their revenue. So they are not doing well. Iron Mountain, they've been shifting into data centers. So they've gotten a dividend safety upgrade to the higher end of their borderline safe. And I think this is the last one. MPLX, which I think was spun off from Marathon Petroleum. If I might have that wrong. But they gave them a dividend upgrade. They are oil and gas storage and transportation. And then I like this. You click on your portfolio and it'll tell you things like that. Like there you go. Starbucks, next dividend declared, no change. And what was that? SCHD? Yeah, so SCHD announced the next dividend, and then they tell you your annual income increased. But there was a fun one that was big here. Where is it? Their Realty income 120. I think it was Maine. I don't know if they'll have it on here. It was a big. Oh, come on, you son of gum. There it is. Main Street Capital declares a next dividend and a 30-cent per share special dividend. So I received $45 because I have 150 shares. So there you go. A little bit of news coming at you. And nice. Let's see what you guys also said. Simply Stacks wants to know. Simply Stacks writes in. SCHD, JPQ, and Vivu. You know, I honestly don't know what Vivu is. Somebody clue me in. What is it? Was that a typo or is that a covered call strategy on VOO? I would love to know that. Oh, so Shamir, they have Libby up in Canada too then, right? Oh, no kidding. Yeah, so I did treated myself on New Year's Day. The Wall Street Journal was running a special for $4 a month. You get access to Wall Street Journal, to Barron's, and to Market Watch. So I did that for a year, $4 a month, and it's been all right. You know, some days I get so busy and I have the alerts on every time they put up a new story, and it's just I get inundated with all these articles. But all right, what do you got? Kevin Rayberg, who slipped in quietly. He always does. Altria, Western Union, and I don't know, GSBD doing well for you. Fantastic to hear. Yeah, and this is the thing that's with macro. Honestly, we can't predict it, and I think it's better to be granular and focus on businesses. So unless a business has such heavy exposure to China, put it that way. So, you know, I guess using mental models, we can think about trying to separate, fact from assumption. So a fact would be, and I should have looked up the number, whatever Starbucks' revenue and exposure is to China, that's fact. And then I guess you can, war room it and say, okay, worst case scenario, China invades Taiwan, they get cut off from the world, and they confiscate 100% and control everything that Starbucks had in China, and it's a complete and total loss. We can put that number down on paper and see what that would do to the business. And if it's not going to cripple them, then it would be a thorn in their side for a little bit, but it would hurt their growth, right? So, oh boy, Jim. Yeah, I know. He watched the Reagan-Mondale debate. Well, you know, politicians had class and knew how to respectfully debate. You know, I guess we all like to think that politicians were better then, but we forget how awful politicians were back then too. So, but that's, you know, my take. It's always been nasty. It's always been nasty, and you know, we'll see. But fun thing to share there. Yeah, social media. I think it's an overall good, right? It does accelerate the information that travels, but unfortunately, it also is an accelerant. You know, adds velocity to bad information too. What are my thoughts? Hey, what's up, Zamin Ali? I don't know if I've met you before. I don't think so. My thoughts on the ETF MBOX Freedom Day Dividend ETF. It's a dividend-focused ETF that seems to keep up. You know what, man? We will look it up real quick here on Seeking Alpha, because you've got my interest peaked. Let me pull you guys along. Let me pull you people along with me here to the land of Seeking Alpha. I don't know MBOX, and I know we're running here Freedom Day Dividend ETF. I can make that bigger for all. A little bit. No, it's too big. It's too big. 1 year, 31%. That's not the total return though. Expense ratio 0.39%. This may be, I don't know, gimmicky. Let's see if we can see real quick what it does. EA Series Trust. Public equity markets of the U.S. Invest in stocks of companies operating across diversified sectors, growth and value. Yeah, could just be like a growth ETF though, right? What are they in? Mostly financials, tech, healthcare. Top 10 holdings: Eli Lilly, Dix, EOG. Dividend yield 1.67. Yeah, I don't know, man. 52 holdings. That's only a few holdings. It could be all right, but it just, I don't know. I think there's better options out there, right, guys? Right? What do you guys think that are watching? I don't know. It seems gimmicky. I mean, I don't understand Freedom Day. Like, I'm trying to figure out the correlation, but yeah, I don't know. For me, I think I would rather just go with like, well, what's the thesis for it? I mean, growth and value, just VYM maybe, or VIG. I don't know, something like that. Well, no, those are dividend growth, but I don't know. I can't think of anything right now. Nice, Darth. Are these all the ones you own? I'm guessing, yeah. Thoughts on AbbVie and Pfizer? I think Pfizer is going to struggle for a while here. So since you asked, Ivan, out because I want to get the number right about Pfizer. The thing about Pfizer is, as we scroll to the tippy top and look up PFE. So the thing about Pfizer here is that it's too big. It's too big. So 6% yield. That should be your first inclination that something is not right here. When you see a yield for a stock that is, you know, pharmaceutical, and it is, let's see. Yeah, they've been raising a penny a year for a while, so keeping their streak intact. When you see a yield that's 53% above the 5-year average, immediately you should be skeptical and say, okay, the market's telling me something. I really need to dig into why. It's at the low end of the 52-week range. The yield is just so ridiculously high. So I know their free cash flow payout ratio here jumped, but the thing that turned me off was free cash flow per share. So they were really helped out greatly by the vaccines and you know whatnot from COVID. But as that starts to subside, you could just see it fell off a cliff. Now their free cash flow per share, even projected over the next 12 months, is well below where it was 10 years ago. Yeah, their sales growth, you know, it just went through the roof in 21. But again, total sales 49 billion, call it 50 billion, and it's 58 billion. So it's gone up a little bit, but that's kind of a flattish, like a radish chart, you know. And I think their debt might be up a little bit. Yeah, their margins have just fallen off a cliff. So yeah, debt is not crazy. But yeah, that ICR. So for those of you that might have just jumped on, when you see interest coverage ratio and you see this 2.38, it means in a nutshell, they have Pfizer right now has $2.38 of operating income to cover every $1 of interest expense. So there is not a lot of wiggle room there. So I'd like to see that higher, but AbbVie's much stronger. I would rather go. All right, Darth, we'll see you go to Betty Bye. That makes, two of us. I appreciate that. I don't know. I hope that's a good thing, I assume. Thoughts on Ally? Dissector. You sound like a transformer from when I was a kid, like a dissector. I've not dug into it too much. I think they've been struggling, right? I know they do have people that love them. Beautiful. I do not remember that, but yeah. What else do we got here? So one more. That's funny you say that. Ian is buying indeed, but I don't know. This is one I can't get on board with. I would just rather stick it out with J&J. And again, I always want to preface that and say, I hope I'm wrong. I really do hope I'm wrong and they don't. But, if they cut the dividend, put it this way, if Pfizer were to cut the dividend, I would not be surprised in the least at all. One more. Girl Maxu, thoughts on MetaFast? I think they're a cult, right? I think they eliminated the dividend, but they just seem like a weight loss cult because they had these. I remember I researched them for a video, kind of like trainers. I don't remember what they called them, but they help people lose weight, and then they try to get you to be one of the people to find other people to help lose weight, and it felt very. It was weird as I listened to the earnings call, read the transcript, looked through their 10K. It felt very just. I don't know what other word to use. It felt cultish to me, and I didn't like it. And then they cut the dividend. So, if you're down, you don't have to hold. You don't have to make your money back the same way you lost it. It's real easy for me to say that, and here I am down like 50% on Leggett and Platt, and I'm like, it'll come back. Like it's just a bump in the road. So we'll see there. But MLM, that's what I think they are. Yeah, they're like Amway for weight loss, dude. I get it. I love it. All right, I could just go. You guys could keep me going all night. Ivan, this will be the end. This will be last. Yes, my thoughts on T and Verizon. They're going to be with us for a long time, but the growth sucks because they're very capital intensive, and they are very competitive industry. They're always. A new innovation comes along, like fiber, like 5G. They have to spend money to upgrade the infrastructure and build it out. So, I'll say this to you, Ivan, that back when I first got into AT&T, as I was driving around, I'd be like, look, there's an AT&T truck. Oh, look, there's another AT&T truck. They're up there on fixing that, whatever, the up there on the pole, and then I'd be stoplight. I'm like, oh, an AT&T store. I'm like, there's people in there working, and it's like, now I'm like, oh, that means that they're having to spend money on trucks, insurance, wear and tear, on property, on people to be in the stores, on utilities. There a lot of overhead, and I'm like, oh. That's what capital intensive means. So it can be a drag on the business to have to keep up with that. So, and then Michael, you can end it with that, where I would say an alternative, great thing, Swamiji, is to look at Comcast. I think that would be a fantastic alternative to Verizon and AT&T. So just my thoughts, just things I've learned. And big dev companies are scary. So I love all you people. I love you. And stay tuned. I don't know, maybe Thursday night. I had an interview with an old friend who's a millionaire next door type. I'll be editing that. It'll be coming out later in the week. And then the live, I might just do it after Ryan, when Ryan ends. Because I think he ends at 8 o'clock Central or 7. I don't know. No, he ends at 8 Central, so right about the time I'd go on anyway. So we'll see if yours truly is all packed for the trip. We'll do that. But yeah, once again, I really do love all you guys. Thank you for spending time and you know me, kid of the 80s, and I'm gonna do this for as long as I don't know, as long as I want to. I thank you, and I always have Pee Wee take me out. So happy Easter if you celebrate. I will talk to you. Let's go. We got a full week this week, so let's see what happens, and we'll talk about it. Peace, everybody.